bonds. As previously mentioned, bonds will fill your portfolio based on the asset allocation that you decide. But what are bonds? To buy a bond, you give money to a corporation or government with the expectation that they pay you back plus interest. Now, bonds have a lower average return than stocks, as well as lower expected risk. On average, over a very long term, stocks tend to return 6 to 8%, assuming you're properly diversified, as mentioned in the last video. Bonds, however, are closer to the 2 to 4% range. So why do we want to buy bonds then? Simply to help lower something called market risk. As mentioned in the previous videos, stocks have specific risk called idiosyncratic risk. However, all stocks tend to correlate to each other at some level. This means it's possible for the entire market to go up or to go down. So even if we have a properly diversified stock portfolio, there's still a chance the entire market will go down. For this reason, we put some of our money into bonds to help lower this overall market risk. And as mentioned in the asset allocation video, the older we are, generally we want more money in bonds and less money in stock. So how do we buy bonds? My preferred method is to buy bond ETFs, just because they're really easy and convenient to do. Here are 4 that I recommend: BNDX, BND, BLV, and VGIT. That's all for today. See you guys next time.